Hey everybody, welcome to episode 2. I got Keelan here with Highlands Mortgage, and I just want to say a big thank you. This was a last minute thing. Sean, who was going to be with us today, he's out in Montana, he's hunting, and our panel was going to be a little bit bigger, but people are sick, out showing houses and selling, so it's you and I. We got the floor today.
Yeah, including me. I'm on the tail end of a cold, so I apologize, but I promise we're going to get into some good nitty-gritty stuff that I think you guys will find really helpful today.
Yeah, so today we're gonna go over the buying process from the start to the end with Keelan and his expertise. You're gonna tell us some really important stuff on the lending side. Obviously, on the realtor side, I'll give you guys some tips and why things are really important. Talk about the state of the market, where we are today, and where we think we're going. So. Really, it all starts with the lender, because I can't do my job, and the customer can't really honestly do their job and look for what they want until they talk to you.
Yeah, I think it's so important for people for you to be educated. It's going to provide you a lot of confidence in going out there in the market, and without having an understanding of, I'm very conscious. I was previously a financial advisor, of budget. So we got to look at your specific scenario and figure out what that looks like for you and your family. One of the questions that I ask is, where's your comfortable down payment? Where's our max down payment, comfortable monthly payment? Really analyzing your budget and really trying to strategize based on your specific situation. Ultimately, our goal is we don't want you to get into a house and feel house broke. We want you to get into a house, feel comfortable, confident that this is what's going to fit your needs. And then it also helps Ben, because we have a very specific purchase price, a very specific scenario that's presented to Ben, so he can show you houses that are very specific to your needs, to your family. If you're blindly out there just shopping, you could be looking at stuff that's maybe out of your price range, or a lot of times even below your price range. You're out there looking at stuff, and people are a lot of times really pleasantly surprised to find out, wait a second, we could afford a lot more home, especially when we come up with some of the strategies that we use.
Well, and to that point, I hear all the time somebody that's renting, or we just talked to a young gal the other day, and she wants to own a home, and I hear all the time, like, I can't afford it, especially in our market, because the prices just went bonkers. But you don't know what you don't know, and so
Exactly.
it's talking to you. Maybe there's some things that we can do that only takes a few months, that puts them in a better position to buy, or it's just somebody, they just think, hey, I can only afford X amounts. I know that's not available. Once they start talking to you and talk about their strategies, then they realize, oh man, like if I just change a couple things and do this and that, my budget's actually really here, and I'm in a better position than I initially thought.
Yeah, it saves you a ton of time, because now you're only laser focused on what fits your budget and what you guys are comfortable with. And I mean, just Googling things on the internet, even the calculators online.
Yeah, talk about those online calculators.
Yeah, they're so wrong. I mean, it's unfortunate, because I mean, it's a 1-800 internet calculator. They don't have anything to do with your specific area. One of the main things that I see that's always wrong is like mortgage insurance, homeowners insurance always seems to be very high. Interest rates are completely wrong. So if you were just relying solely on the internet calculators, you're going to be way off. And not only that, you're shortchanging yourself on the amount of information that you could get. You really need to be educated on what are closing costs, what is escrow, what is title, what am I paying for, what are the knobs I can turn to adjust my budget.
Well, and the computer can't say, hey, pay off that credit card, or do this, and the computer can't look at that data and tell you what you can do to help increase your buying power.
Yeah, I tell my customers, now that you have us as a team, it's not a matter of if, it's a matter of when. Now we can focus our energy on what actually is going to be helpful, and everybody starts somewhere, and there's nothing wrong with that. There's no bad questions in mortgage. Sometimes people are nervous about this, and the reality is that's what we're here to do. We're here to educate you.
Well, and two things just came to my mind. It's when somebody talks to you, because I think some people are hesitant, because that's a commitment.
Yeah.
And that's not. Just talking to you and inquiring, it's not a commitment. They're not signing their life away to you. It's really just to seek info, to see where they are in that process.
It couldn't be so far from the truth. I have from the truth. I don't have any urgency with people unless they have urgency. We can perform very quickly if we need to, and not so much in this market, but previously there were scenarios where we need a pre-approval right now because we love this house, put in an offer, quick close. We can can do that. But by all means, that's not where we're at. Like we don't have any urgency. The best time for you to buy a house is the best time when it's in your best interest. It doesn't matter to me. You're not wasting my time by any means. This is what I do for a living.
Right.
I educate people. I
Right.
help people. And, it's just a matter of time. And that's my joy. I've been fortunate in this industry where I've been very successful. That kind of piece goes away. My why is because I like people and I want to help people and I want to help generational wealth through real estate. And, even if I'm helping somebody on their credit, I'm fine with that. I'm happy. Please use me as a resource.
Yeah. And so I want to talk about here in a second what they need for a pre-approval. But before you get into that, it really helps me once they get all this information to then do my job, because then I don't want to spam people. I don't want to spam you. I don't want to send you houses that you're not interested in. I don't want to send you the $1 million house that is perfect and then we realize, man, your top dollar is $800. It's just out of reach. That's going to be crushing. So me getting that information really tees me up to do a good job for the client. So let's talk about what is generally needed for a pre-approval, and then we'll get into that next step, which is going to be me.
Yeah, so typically with me, I like to have just a conversation out of the gate, make sure I answer any questions, get your preferences, get a better understanding. The more I know my customers, the better. And then depending on our timeline of when you're looking to purchase, the next physical step is to fill out the application. And then we need a list of documents that we're going to need. So we need a copy of, and this is a standard list across the board for any Fannie Mae, Freddie Mac loan, which is 95% of all loans out there. The ones with the lowest rates, the ones that most traditional lenders use. So you have a copy of your ID, copy of your bank statements, tax returns, W-2s or 1099s, depending on how you get paid. Any mortgage statements that you have for any other properties. We make it very simple. We have one list that goes out. You upload that information. My team would go back, and myself included, we review all the information. What I typically do is max qualify you, but then turn it way down to where you're comfortable, because nobody really maxes out their budget. Believe it or not, on a conventional loan, you can go up to 49% of debt to income ratio, half of your income. I would never advise one of my clients to have half their income on a home. And house broke, yeah. And now that doesn't even include electricity, utilities, all that stuff. So again, going back, custom mortgage solutions are so important, going back to your budget where you're comfortable, dialing that in. Now we have that set up. That first initial credit pull is good for 120 days. From that point going forward, I'm not quick though to go just pull people's credit again. It makes no sense. Our goal is to keep your credit score intact as high as possible, to give you the best possible rates and solutions. And then once we got all that dialed in, then I pass the buck over to Ben. Ben can go out and do the house shopping. I personally do custom pre-approval letters. You'll talk to a lot of banks that just give out like a generic pre-approval letter. Not a big fan of that, because if you qualify for $1 million, why do the sellers need to know that, right? If we're going in for $600,000 house. So I'll do a custom pre-approval letter based on the scenario that you and Ben discuss.
Yeah, so now that we have that pre-approval, we're going to fine-tune your criteria. We're going to start looking for those houses, and once we identify the right house, and I'm going to stick with the $1 million because I like round numbers. Say you find something for $500,000, I don't want to tip our hand. It's all about leverage. So I'm going to get with Keelan, and I'm going to say, get me for. We're going to write it for 505. So it's going to be 505
on the dot.
And then if we get a counter and say it's at 515. I don't need that until we're under contract. Now, a lot of times the selling side, they're going to want it, and it's actually built into our contract that we have to give it to them within a certain amount of agreed upon days. But a lot of times they will just say, all right, well, it's going to be 5:15. Get it to me within 24 hours. I call Keelan, I text him, and we're good. He sends it to me. So now that we're under contract, you're going to want to do a home inspection. Totally advised to do that, even if they just had it done 5 months ago. This is a perfect example. I had a listing. I paid for the pre-home inspection. Just last week, we had a serious buyer, and I told the buyer, I'm like, just for peace of mind, go ahead and redo it. Use a different company. That way we have two different eyes looking at it. And the results were practically the same. So anyways, very important, because you got to know what you're buying. If the roof has a major problem, the foundation, you're going to want to know about that. We have a ton of moisture up here, so finding mold, identifying that and dealing with it, you're going to want to do that. There's some people are super sensitive to mold, and ain't nobody got time to be dealing with mold.
Yeah.
So, so we're going to get that inspection. That's done within, I can get it done within the first 5 business days. While we're doing that, Keelan is sending you some additional info to get the appraisal going, and we'll get to, well, I'm going to hand this back to Keelan in a minute, but the appraisal up here is not going, we're not in that time frame yet, but he's working to get that set up.
Yeah.
What's also happening as we're doing the home inspection, we have the title company. We opened up Escrow. They're starting to dig into the property, to the owners, to the buyer, and just making sure everything is kosher, everything's above board, making sure that you know everything about the property. Is there an easement? Is there view easements? Is there CC&Rs? Are there back taxes that's going to prohibit the sale of the property? Is there mechanical liens from 5 years ago that haven't been paid off? So the title company, they're making sure that you get a free and clear house with no issues. So now let's go back to the inspection report. Say it comes back clean, you move on, that's easy, you go on. Say there's some minor issues, you can just accept it and move on with those issues, or you can renegotiate. You can negotiate, there's a lot of avenues. You can say, hey, seller, take care of this. What's a more popular option and what I like more is asking a credit to take over those options, because you may not like the person, the electrician, the handyman to come out and do it. Maybe the homeowners want to do it and we just don't trust their ability. So I like the option of just suggesting a credit at closing, and a lot of times then that's just applied to the lending side where you bring less money to the table to close. You keep that money in your pockets, then you know what the issue is, and we can just tee up the people to fix the issue right after we close. I do this all the time with mold. Probably 6 out of 10 homes up here do have mold in it. We get an estimate. We get the credit of that estimate. I book the company to come out the day of closing, and they start doing it. So it works really, really nicely. Now, if we're at an impasse and we can't agree on terms for whatever the fix-it list, maybe it's something major, maybe it's just an impasse. We'll just leave it at that. We can terminate the deal. Earnest money is refunded back to you, the buyer, and we're back on the hunt. But in this scenario, we're going to say that we agreed to terms, maybe we asked for a credit, whatever. We're still getting paperwork to Keelan. The title report, we looked that over, it looks great. Now we have the appraisal, and you're up.
Yeah, so in tandem, you're doing your thing on the negotiation. We're acting as if and continuing to perform on our side of things. We're going to order the appraisal right away. Now, think about this. We're very blessed with our company. A lot of companies have a third-party appraisal management system. I'm not even allowed to talk to appraisers. They want me out of it. And the reason for that is they don't want mortgage advisors like myself trying to influence appraised values. So we have to 2008, prime example. So we have to go through a third party. And so typically we're pretty sneaky about it. During COVID, appraisals were really expensive. They were like $800, rush them $1,000, $1,200. Reason being is they were so busy, these appraisers. And so if they're going to do your appraisal in a timely manner, they're going to charge you for it. What we do is actually think about we start about $550, and then we throw it out there and think about like a lake and we're trying to catch an appraiser. The fish are appraisers. So we throw our lure out there for $550. Depending on our timeline, then, did we catch an appraiser that will do it? We'll keep pushing and pushing to get an appraiser that will do it in a timely manner, and then we might have to increase the cost, but we don't want any delays on the appraisal because we can't close it without that appraisal, and there's still underwriting and things that need to be done. So we do whatever we need. I think at this point, I haven't seen anything above 800. It's calmed down a little bit, so we're fine there. I think you're going to be mostly on the $550 time or price at this point for that appraisal. But not to get the appraisal confused with the inspection. Appraisal is all about a value of the home. Now conventional loans are fine. FHA and VA loans, they are a little pickier on what's called deferred maintenance. So if there's things in the home that would cause an issue for the longevity of the property, the appraisal will call that out. And you can talk to us specifically about what those things are and what I've seen. Typically water damage needs to be replaced. If there's safety hazards, things of this nature. Nothing too crazy though. I think FHA and VA gets a bad rap.
They do.
When it's really not a big deal, guys, because worst case scenario, The appraiser comes back and says, per VA FHA, you need to replace this squishy board on the deck. One board, boom, boom, boom. The appraiser comes back out, he clears it, and we can close, and retaining that appraised value. So even without a cleared appraisal, we can continue to do our job on the back end and continue to process the loan and teeing ourselves up for close.
And what we see a lot too is peeling paint.
Yeah, peeling paint, yeah.
And what's great about this is the appraiser doesn't care if it matches or not. It could be, you could have a black house with white paint to cover it up. They don't care. Just they don't want the chipping paint. And that really goes with a lot of repairs, because another thing I see called out by the VA and FHA is not having a rail on a deck. And so people get creative. They just throw up some 2x4s and they get that dog gate and they just like punch it. It's by no means a long-term solution, but it satisfies their checkbox.
It's not about beauty here. They're thinking about functionality. Like if you have exposed wood technically and you just left that to the weather, eventually you're going to have some problems with the weather, damaging that wood and that type of thing. They don't want anyone falling off the deck.
Right.
So, you can slap whatever you want up there. I mean, we're talking quick fixes, and we can always worry about that stuff later as far as the making it look pretty.
Right, absolutely. All right, so now that we're out of the appraisal, I mean, at this juncture, 95% of the time, we're free to close. We might just have to button up a few things, just wait for maybe a last document or two, but we're pretty much ready to close. So when we get to closing, we're gonna likely meet at the title company. If you're going to be local, we're going to go to the title company. We're going to sign everything. Make sure you bring your ID. If you're bringing your down payment, you can bring your down payment in the form of a cashier's check. A lot of times it's just included in a wire transfer from the bank.
Yep.
But sometimes, I've done it a few times, I brought in a live check and my lender and the title company was probably mad because it takes longer to...
Hey, we got what we need to close.
It's there.
Yeah, it's there.
But yeah, so if you're going to be out of state, had a lot of people that have been out of state, or partner with another title company, or sometimes we just hire a mobile notary to meet them at their job, their house, wherever they're at, and we'll get it done. So closing is not a big deal. There are a lot of places that we got to sign, but we get through it quickly. All these title companies, they do a really great job. I know you guys over at Highlands, your docs are always in order. Is there anything that you can think for closing?
No, and it's not a surprise to you, because we would have had an initial set of documents that would have went out for electronic signature.
Yep.
Any changes along the way, you get an updated loan estimate, and then in the end, we get what's called a closing disclosure. And there's checks and balances in this game. So there's Escrow, the middleman. They do all of their, and I mean, by definition, that document's a living document through the process, because we have to update costs for things and all that. Escrow reviews everything, make sure down to the penny, everything is perfect. Our closing department does the same thing. They balance, and that's what they draw your final documents on. And so our customers are well informed before you even show up, what you're signing, and making sure that there's no questions or anything like that. Typically, you sign the day before you fund.
Yes.
So we'll have you sign the paperwork. And the reason we do that is because the documents need to get processed, and we want them to go to the county to get recorded as early as possible that day of close, so you can get keys the same day in the afternoon.
Yep. So now let's just take a quick pause here, because later this month, on the 30th, we're hosting a workshop here in Sandpoint.
Yeah.
And we're going to be talking about this. But we're going to have, Keelan's going to be there. Sean, unless he has another impromptu hunting trip, Sean's going to be there. We're going to have Title. We're going to have Best Inspections USA, Flying S Title. They're going to bring a food table, and they're going to be available to answer any questions on the title side. So if you're local, make sure that you come out. We're going to have it over at the library in Sandpoint, 4:30 to 6:30. So come get a lot of good information. Fill your stomachs with a little bit of food and some drinks, and it's going to be really good information. There's going to be a lot of this, but we're going to have other realtors there too that you can talk to and bounce ideas off of each other. And just get educated on this whole process. So I wanted to mention that at the beginning, but I got so excited, I just started talking.
We jumped in.
Yeah. But anyways, November 30th, Sandpoint Library, 4:30, 6:30. We're going to be there. We want you guys to be there. Okay, so I mean, in a nutshell, I don't know how long we've been talking, but
Yeah,
in a
yeah.
nutshell, that's kind of the buying process.
Yeah.
It's there's a lot, but when you break it up and you talk to the right people, it's actually not that scary. There's a ton of
No.
steps, but that's why they hire you. That's why they hire me, is to
Yep.
break it up and make it as easy as possible.
Palatable.
Palatable.
Yeah.
Yes. So let's talk about this real quick. So if somebody wants to move into a house, we'll just say March. It's going to, right now, I would say probably still 30 days from the time we go under contract to the day that we close. 30
Correct.
days is probably still a pretty good number.
Yeah.
We might be able to get to 25, but
Yeah.
30 is safe.
Yeah.
Okay, so it's going to take 30 days to close. So that puts us in February to that we have to identify and go under contract.
Yeah.
I'm thinking right now for you to find, not you, but
Yeah,
you
yeah.
guys,
Yeah.
for you guys to find the right house, it's going to take 30, 45 days to do that. So now we're into early January, late December finding something.
Yeah.
Now, before we start getting serious to identify something, there's some homework that we generally have to do to put you in the best position.
Agreed.
And that could take, I'm using 30 a lot, so let's just stick with 30. So now we're back
Yeah.
into right now, November. So if you want to buy something in March, and just to be in the best position and have a smooth transaction, you really should start doing your homework right about now, because it's going to be about 90 plus days to go through the entire process.
Yeah, and I can assure you, our customers, one of the things that I hear from everybody is the relief of knowing. Because just having that kind of not sure and, throwing darts is a lot different than having a clear plan and an understanding and putting your effort where it matters. I've seen people even make mistakes where they're paying stuff off that has no impact on their situation, and they've wasted a bunch of money that could have been better used for a down payment. And, and we haven't even got into the strategies, which I don't know if we'll have time today, but when we do have our meeting at the end of the month, we're going to specifically get into some strategies right now. But yeah, it's good to know what you have as far as tools in your tool belt as early as possible, because even when I hand you back to Ben, you got to find a home you love, no matter how good we educate you.
Exactly.
There's not much we can do until you find something you love.
And here's another reason why it's really good to talk to a professional in the beginning. Let's say, and I'll use a personal story here. So my wife, she was a W-2 employee. I'm 1099, meaning I'm self-employed. She gets paid every 2 weeks from a company, in case you guys didn't know the difference. We were building a house. I needed her to be a W-2. The bank, even though I had enough history and everything, they, for whatever reason, I didn't use you guys. I should have, but they didn't want to use my income. So luckily, she was a W-2 employee. We closed, but I knew that if I changed her over to start working with me, and she is now, she's a big help. Thank you, Jessica. But now she's a 1099 employee. Had I changed her over through the course of our loan, huge red flag, and now it's getting blown up. So and I'm telling this story because if you have plans to, and you don't even have to go from a W-2 to a 1099. If you decide I want to be a nurse one day and the next day I want to be a diesel mechanic, totally different spectrums. But it doesn't even have to be that dramatic. Basically, if you change your profession segment, it's going to throw everything off.
Yeah, you want to be, before you make any moves, if it's on your radar to buy a house, definitely talk to us. Every situation is boss, and I've seen everything under the sun. And there's very specific rules. A lot of times people think that it's like a bunch of people in a room that's like, oh, they're worthy of buying a house. Farthest from the truth. It's like a light switch. It either is or it isn't, and it's based on documentation. There's a lot of hoops to jump through, and so it's not kind of a fluffy thing. We have to know specifically what it is. But think of me as the lawyer, an underwriter as the judge. I'm on your side. I need to know the story so I can figure out the cleanest, best path to get us through the process, because ultimately my goal is to give you the best experience possible.
Sean and I had a deal this year where my client didn't want to tell him everything.
Yes. Yeah.
You
happens
heard
a lot. I haven't heard this one specifically, but
well,
it's
I'll have to tell you. But yeah, it was. He didn't want to tell him everything, and had he just, once we figured everything out, what he wanted to do, he screwed up the process so much. He made himself unloanable, and now he has to wait a couple years to reset everything. And had he just been honest with Sean,
Yeah.
you know, you guys get your creative hats on and you make it work.
Exactly. And it's about finding, you know, I don't necessarily need, for example, you have employees with bonuses, all this stuff. I don't necessarily need all that. A lot of what we do that's really smart is dumbing it down and making it very simple so we have a nice, easy transaction. Most people are very honest about their situation, but we always find those people that feel like, I don't know if we're going to judge them or what their thought
Right.
process is there, but farthest from the truth. Our job is to help you and get you through and have a great experience while doing it. Please tell your loan officers everything in all situations. You know, worst case scenario, it's going to lose you money. It could possibly literally lose you money in the transaction. Best case scenario, we know we come up with a plan, and it's no surprise when you're in contract.
Good. So let's talk about, real quick, we don't have to spend a lot of time on this. I think everybody pretty much knows, and I beat my audience to death about where the market is currently, but where do you see the market right now today?
Well, a lot of people get confused because the Fed increase in funds rate, they think that's connected directly to mortgages. It's not. What is directly connected to mortgage rates and why they're high is inflation. The government's been doing a pretty good job of increasing the Fed's fund rate, which hedges inflation, and it's just a matter of time. We knew this before that was going to take hold, and it's a pretty unique time right now. We had finally a CPI report, Consumer Price Index report. It's an indicator of inflation that just came out, and it came out positive, which means this report's going to be positive and year over year is going to be positive. We were waiting to turn that corner because we know that once those CPI reports and then also a PPI report came back this week, we had a huge 200 basis point improvement in rates. I feel like we're taking this corner where we think rates are going to go back down. Totally. They have to go back down to stimulate the economy. What's the best way to stimulate the economy? Through housing. So we know they're going to go down. I don't think anyone has a perfect timeline. It might not be just a drop it like a rock. It could be an up, down. But generally speaking, the longer you draw that line, we're going to see lower interest rates.
Yeah, no, I totally agree with you. Well, actually, that's the last little segment of today. I'm not going to jump ahead of myself, but I totally agree. I think today's market, when you start looking at the numbers, it's a balanced market. Yeah. The only county right now in North Idaho that isn't a buyer's market is Boundary County. They blew through the threshold. Yeah. So we'll see what Boundary does. But Kootenai, they are actually closer to a seller's market than a buyer's market. Bonner County is closer to a buyer's market. So when you put it all together, you're in a balanced market in North Idaho. And what I'm seeing is sellers they think they still have the power, which is not true. No. Buyers think they have all the power, which is not true. Yeah. But the buyers made up so much ground from the last 2 years that it's finally like I am seeing more give and take from both sides to come to a mutual agreement that, and the best deal is when everybody loses. It's for real. I mean, you have to give up a little bit.
Everybody's got to meet somewhere.
Yeah, it's just like, I really wanted this and that, but I'll give up that, and you can all move on. So I'm seeing a lot more of that, and that's good. So I got some numbers here. I didn't memorize them, but this is some really good information, and I'm going to spout off some numbers, so it might get a little boring here for 30 seconds, but this is good info. So in 1957, the interest rates for mortgage was at 5.25. The average cost of a house in America was $19,000. 1970, 8.5 rate, $25,000. 81, 15.23 rate, $64,000. I'm sorry. That 64,000 is not correct. In 81, the interest rate was 15.23%. I don't have the home value at that time. But in 1983, 2 years later, the interest rate went from 15.23 to 3.2%, and the average house was 64,000. In 96, 7.81%, average price 112,000. 2009, 5.04% for the rate, 187,000. 2022, and these numbers I pulled about a month ago, so we're a little off, but 6.83. I think we're in the low sevens right now.
Yeah, 7 about, yeah.
Okay, so we're close.
Yeah, we're close.
But 388. Now, if you didn't catch this as I'm reading off these numbers, from 57 to 2022, up to the right, meaning the prices of houses, the value of the houses continue to go up. What did we notice about the rates? We're at 5.25, 8.5, 15.25, 3.2. It's all over the place. The rates change. If you wait for the rates to change, you're going to miss out on your house more than likely. Now you got to wait for the next one. And that, I mean, there will always be another house. But right now is a good time to buy because there's so many people on the sidelines. You don't have the competition. So you can go out and you're going to have a higher rate. Totally get it. But there's a program, and we'll slightly touch on it because I'm mentioning it. But on the 30th, we'll go more in depth on this. There's programs out there to help with affordability. But quarter two, I'm predicting that we're going to be back in the 5%. We're not going to be really in low 4s. We're not going to be in the 3s. So you can shave off about 1.5, 1.75 of a point in 6 months.
Yeah.
You just refinance, because now what's going to happen is in 6 months when you can change your APR, your interest rate, you can change that, but you can't change your purchase price, and it's going to go up more. So if the house that you want is on the market today, go get it, because you're not going to have to compete for it, and it's going to be cheaper today than it will be in 6 months. So talk about the 2-1 buy down real quick.
Yeah, Ben's spot on. We have a saying, marry the price, date the rate. So right now, the problem last 2 years, good luck even buying a house, and then you're taking all the risks with wave contingencies and all that. So right now, the ball's in your court. So what we're doing right now is we have a 2-1 buy down and a 3-2-1 buy down, which I love. And what you do basically is use a seller credit. He referred to seller credits a little bit before. You get seller credits to pay for a reduced monthly payment. Really, the pain point right now for everybody is the payment that's associated with higher rates. It's not the purchase price of homes whatsoever, because they're more affordable. You're getting deals right now. People are out there wanting to sell their house and meet you somewhere. Last 2 years, they didn't care. You were getting bid over 50, 100 grand. Who knows what the scenario, multiple offers. So the beauty of this is you're using seller credits to get yourself a lower rate. A 2-1 buy down means the interest rate would be 2% lower for the first year, 1% lower for the second year. On the third year, it goes back to that standard fixed rate. Now, this isn't an adjustable rate mortgage at all. This is a 30-year fixed rate mortgage, but you're using that subsidy from the seller to be able to, and it's literally the difference from, in that scenario, let's say 7% interest rate, it's literally the difference between the 7 and the 5%. You subtract the principal and interest from those, and then you times it by 12. That year, let's call it $8,000, something like that, $7,000, $5,000, depends on the purchase price of the home. But you use that for the first year and the second year, add those two together, and that's what we need as far as a seller credit. Now, a lot of times people think, oh, no, that's just paying points. No, you're not paying points at all. If you paid 10, 15,000 points, meaning you're spending money to buy down your rate. If you did that, you're wasting your money. And the reason you're wasting your money is because you are going to refinance in the next 12 to 24 months to a lower rate, which means you just lit that money on fire to invest into a lower rate. That's a really bad idea. This program, you're using the seller credits and you're using that to subsidize and offset your monthly payment, so it's affordable now and it's important. And then the idea is to refinance you later, and you never see that higher 7% interest rate. Yep. You refinance in 1 year or 2 years, and then your next question I always get is like, oh, what happens if we don't use that seller credit then? If we were to refinance in year 1 and we still have $6,000 we didn't use to subsidize our payment. That's the beauty of this thing. That goes directly back down to principal. So it's like you made a $6,000 payment back to your mortgage, which brings the principal way down. When you refinance, what do they use to pay your closing costs? They use the principal. So now you've used the principal of the buy down to pay for your refinance in essence, which you know you're going to do. And depending on the situation, if you put 10% down, you can go up to 6% seller concessions. At less than 10%, 3%. So 3% is usually a 2-to-1 buy down. The 3-2-1 buy down works the same way. You're just getting the interest rate down 3%, which takes more seller concessions. So you have an amazing negotiator like Ben who's going to go out, talk to that seller. Let's say it's 20 grand that you need. Well, believe it or not, it's possible to get that, because if the house is sitting on the market for a month or 2 months, they're going to have to do a price reduction anyways. They'd rather you get that seller concession. Now it works for you. It works for them. You have the lower payment, and you'll refinance. Now you got the house for cheaper because you married the price. Now you've refinanced, you dated the rate, and you found yourself a new date that's a lot less expensive, and you ride off into the sunset with the best of all worlds.
Yeah, no, I love it. Well said. Here's a few other stats that I want to share with you guys, because everyone's like, oh, the prices are going to just fall out. So average price in North Idaho for selling, $680,000. September, $682,000. August, $659,000. July, $687,000. It's not moving that much. Let's go back to 2021, same months. October, $647,000. September, $707,000. August, $632,000. July, $637,000. Not that big of a difference. Let's go back to 2020. $498,000 for October, $510,000 September, $475,000 August, $640,000 for July. Obviously, these are lower numbers, but you can see from month over month, it's not like 2009 where price is just a rock in the water, just straight down.
Yeah.
We are seeing a gradual, healthy trend here. So the market's not gonna fall apart. Here's another reason why market's not going to fall apart. 41% of all houses in the United States mortgage free.
Yeah.
We just took out however many houses in the United States. We just took out 41%, 40%, round numbers. That's just amazing.
Yeah.
I know of that remaining 60% because of what happened for the last 2 years. There's a shitload of equity.
Yeah.
And I
would say that. Yeah.
And I just talked to somebody the other day, and
Yeah.
I said, I showed their house over in South Sandpoint, and we were talking about the market and how it's not going to fall apart. He agreed with me,
Yeah.
and I was going over this exact numbers with him, and I said, the rest of that 60%, they have a shitload of equity. And what they're going to do because of inflation, they're going to go get a HELOC to pay for their bills or whatever that they need, and they're going to be okay.
Yeah.
And he told me, he's like, Ben, that's exactly what I did.
Yeah.
I'm not making this shit up.
Yeah.
Like it's real.
Spot on.
So now I don't know how much of that 60% is a crap load of equity. I know it's high. I know there's a very small percentage of people that are maybe struggling right now to make that payment because they don't have the equity. And if you are struggling, talk to this guy. He can get you a HELOC. He can do some stuff to help you so you can retain that house and pay your bills. Use that equity, okay? And because of these two things I just talked about, this is another reason why the market's not crashing. And go ahead.
I could add to that too. Show me a market that hasn't appreciated, and there's only one, including times during a recession. Homes, historically, there's been like 9. Homes have always appreciated during every recession. The only offset of that is the 2008 mortgage meltdown, which is very different from where we're at right now. The mortgage meltdown in 2008, we had too much inventory. That was the problem. Right now, inventory is very low. Back then, it was ridiculous. You could literally write a number on a piece of paper, and it's called stated loan income, interest only, things like that. So they were very, very loose. That mortgage meltdown caused the recession, which is very different than every other time in history. The housing market is extremely strong right now. Inventory is low. Demand is high. A lot of people are sitting on the fence right now because of these higher interest rates. But when rates go down, what do you think is going to happen? Rates go down. All these people sitting on the fence are going to come back. It's going to be a very aggressive market again. People are going to want to swoop things up. And the fear of missing out, a lot of people sitting right now, all this doom and gloom they're talking about, which is a bunch of malarkey, it's impossible, are going to get off the fence and think this is my one opportunity to buy a house. I can't buy a house right now, so I got to get in the game. So I think personally it's the best market in the last 2 years right now to buy a house.
By far.
Especially with that 3-2-1 buy down.
For sure. So this is my prediction. I think I already said it. Q2 in 2023, we're going to see housing start to move again. Not like we saw in the COVID days. No, it won't be that crazy. But what's going to happen is buyers are going to understand this is the new market. The bottom didn't fall out. This is the new norm. 5% is the new 3%. That's going to be the sexy number. People are going to feel comfortable with that number. That's going to be, that time frame is about when real estate takes off every year anyways. And those 3 things, and yes, are rate, time, and just being comfortable. Those 3 things are all going to collide in Q2, I believe, opinion, not fact, and we're going to see another little frenzy, kind of like what we saw earlier this year when rates went up into the 6%. We saw a little bit of a slowdown.
Yeah.
As soon as they went below 6, we start seeing. I'm sure you saw more applications,
Yeah.
more files. I started getting more requests to see houses. I think that's what we're going to see. People are going to be more willing to actually buy a house. So that's what I see. What do you?
I think you're spot on. So I've even seen a little bit of turn just this last week with this increase in basis points.
Okay.
That's brought rates down a little bit. A couple of my people that are pre-approved starting to think about, okay, wait a second, this is that time. And that's why you talk to certified mortgage advisors and people very knowledgeable about the market, is because it's about planning ahead. So coming off the fence, Fannie Mae said 4.5%, but also it's taken longer to come off of these high rates. So I think you could be really spot on, Ben. I mean,
Okay.
at that 5%, because it's, there's a little bit of push there for rates lasting. This persistent inflation, right, had lasted longer. So it might take a bit longer to go down. I've heard experts say that rates could even go down to the 3s in the next 24, 36 months. We don't know how low they're going to go. We ride the train as low as we can.
Oh,
and but also that price is even more important. So it's about finding a balance.
Yeah, perfect. I think we're going to wrap it up. We really wanted to take you through the buying journey, and then we just added this little nugget on the end for you guys on where the market is and where it's headed. So, Keelan, again, thank you so much for jumping in last minute. Literally, I called this guy yesterday and said, "Are you available? It's just going to be me. Nobody just wants to listen to me." So thanks so much for coming up and doing this. It was a pleasure. Love your energy. We're going to definitely bring you back and get more of this guy later this month in person at the Sandpoint Library. Super knowledgeable, and definitely give Keelan, I'll have all of his contact info below the video, so that way you can give him a call and get educated and start looking for a house.
Ben, you're the best. Thank you for inviting me, my friend.
Yep. All right, everybody take care. Thanks.
All right.
Bye. All right, cool. Let's see.